Hello, and welcome to Donation Investment. This analysis is for AppLovin on NASDAQ as of 31st of July 2026 with a share price of $390. The full report is on donation.ca. A formidable AI ad engine, but the stock is richly valued and the tape is weak, so the call is a hold across every horizon. Elite quality, 84, collides with an expensive valuation, 38, and a broken downtrend, 34. Great business, wrong price, wrong week. Wait for the trend to turn, and a better price rather than chase it here. AppLovin's AXON engine matches advertiser budgets to the right user in real time and optimizes for return on ad spend automatically. The economics are extraordinary. Roughly 900 employees turn about $6.2 billion of revenue, up 59%, into 78% operating margins, and about $3.2 billion of free cash flow. On the Rule of 40, growth plus cash flow margin, it scores around 111, roughly 2.7 times the elite bar and one of the highest readings in large-cap software. Quality is 84. The debate on this name has never been the business. Here is where the whole call sits. On our disciplined anchor, a multiple warranted by the 10-year yield and a haircut growth rate, the fair multiple is about 20.4 times. AppLovin trades near 32.6 times clean trailing earnings, so 1.6 times what the numbers justify, and above the 26 times rich line for its sector. That fires the valuation-ceiling gate, which caps every horizon at hold no matter how good the business is. The free cash flow yield is a thin 2.3%. The forward multiple of 18 looks cheap, but only if a roughly 90% jump in earnings lands. That is the bet, not a fact. Timing scores just 34. The stock sits at $390, below its 20, 50, and 200-day moving averages of 452, 492, and 521. It is down 48% from its 745 high and has just broken support, sitting only about 9% above its 52-week low. The daily relative strength index is soft at 37, but not yet washed out, so this reads as a falling knife, not a confirmed bottom. And Q2 earnings land on the 5th of August, a binary print 5 days out. Chasing into that is the worst of both worlds. The risks carry equal weight to the quality. First, the valuation. Paying about 1.6 times the warranted multiple leaves no margin of safety if growth even slightly disappoints. Second, the tape is broken. Price is below every key moving average and down 48% from its high. Third, mobile and e-commerce ad spend is cyclical, and the macro backdrop is a headwind, with communication services rated underperform. Fourth, short sellers allege the ad attribution engine overstates results and leans on data access that could breach Meta and Google's terms, unproven but a real platform dependency risk. And the armed AI concentration tail sits over the whole cohort. The bear case is $245, about 37% below the price. Now weigh the risk against the reward. The bull case is roughly 33% above today. The base case, the most likely, about 4%, and the bear case a fall of about 37%, so you are risking about 37 to make 33. So, our call on AppLovin on NASDAQ, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donation Investment at donation.ca. The link to the full report is in the notes below. Have a great day.